Namaste, and a very warm welcome to all our fellow investors and wealth creators. Today, we are deep diving into the powerhouse that is GNG Electronics Ltd. As we look towards 2026, the Indian electronics landscape is undergoing a massive shift. Are you ready to catch this potential multibagger? GNG is not just a brand, it is a household name that has captured the vocal for local sentiment perfectly. In this video, we shall analyze if GNG can truly multiply your hard-earned capital and what the 2026 outlook looks like for your portfolio. Let's get started with the ground reality of this electronic giant. It's time to see if this stock can give your wealth the josh it needs. Coming to the core of the business, GNG Electronics has built an incredible ecosystem. From smart LEDs to energy-efficient air conditioners, they are present in every nook and corner of the country. Their pan-India distribution network is their real Brahmastra, reaching even the smallest talukas where MNCs often struggle. They have successfully bridged the gap between premium quality and affordable pricing. This Paisa Vasool approach has created immense brand loyalty among the burgeoning Indian middle class. By 2026, they plan to double their touchpoints across Tier 2 and Tier 3 cities, ensuring that no household is out of reach for GNG.
Let us talk figures now, because at the end of the day, the balance sheet tells the true story. For the financial year 2026, GNG Electronics is targeting a revenue milestone of 15,000 crores. Their EBITDA margins have been consistently improving, thanks to local sourcing, which reduces import costs. The debt-to-equity ratio is staying very comfortable at 0.3, which is a big plus for conservative investors like us. Actually speaking, the return on equity is projected to hit 22% by the end of FY26. These aren't just empty promises. The quarterly results show a steady climb that is keeping the Dalal Strait bulls very interested indeed. Why is GNG ahead of the curve? It is because they have fully embraced the government's PLI scheme for electronics manufacturing. This has given them a massive 15% cost advantage over imported components. They aren't just assembling parts anymore, they are innovating right here in Bharat. Their R&D centers in Bengaluru and Pune are focusing on AI-integrated smart home solutions. This shift from simple hardware to an integrated software-hardware play is where the real margin expansion lies. By 2026, GNG intends to file over 100 patents, cementing their status as a tech-driven leader rather than just a trader. The macroeconomic tailwinds for GNG are very strong. With the rise in disposable income and the premiumization trend, every Indian family wants a better lifestyle. The festive season demand is now becoming a year-round phenomenon, no? Moreover, the government's push for 100% rural electrification has opened up massive new markets for GNG's home appliances. We are seeing a shift where consumers are moving from unbranded products to trusted names like GNG. This structural shift in the Indian economy is the biggest catalyst for the stock's upward trajectory as we move toward 2026. Now, for the million-dollar question, what will be the share price? Currently, GNG is trading at a reasonable PE, but as the earnings grow, we expect a significant re-rating. Market analysts are setting a bull case target of 4,500 rupees per share by December 2026. Even in a conservative bear case scenario, the downside seems limited because of the strong cash flows. If the company continues to beat street estimates, we might even see a bonus issue or a stock split to reward long-term shareholders. It is looking like a very healthy buy-on-dips candidate for anyone looking to build a solid corpus over the next 2 years. However, we must keep our feet on the ground. No investment is without risk. For GNG, the volatility in global semiconductor prices is a nagging pain. Any supply chain kitsch from international borders can impact their margins temporarily. Also, the entry of aggressive MNC players who might start a price war is something to monitor closely. We must also watch the inflation numbers. If the common man's pocket is pinched, discretionary spending on electronics might slow down. It is vital to track the quarterly earnings calls to ensure the management is navigating these speed breakers effectively. To wrap it up, GNG Electronics Ltd is looking like a stellar performer for 2026. With a solid 25% CAGR growth projection, a strong Make in India foundation, and a clear vision for R&D, the story is very compelling.
For an ambitious investor, this stock offers a great mix of stability and high growth. But remember, don't just follow the herd. Do your own due diligence or consult your SEBI-registered financial advisor before putting in your hard-earned money. If you found this analysis helpful, please do like, share, and subscribe to our channel for more such deep dives. Happy investing, and may your portfolio stay green.